Hi, Assalamualaikum and good morning to Puan Arfah and my fellow friends. Today, my group and I will present the summary of the Parmalat case. First of all, let me introduce ourselves. My name is Nubatusha binti Zahari. My group members is Nurul Nadia, Nur Aisyah, Nur Sofia and Muhammad Nu'man. The company background of Parmalat is a company that produces Italian milk and food and one of the world's largest dairy supplier. The company started in Parma, Italy in 1961 and expanded to Brazil. The founder of Parmalat is Calixto Tanzi. In 1990, Parmalat need for cash and sell 49% of their shares to Milan Stock Exchange. Parmalat also made several acquisitions with debt. In 2001, Parmalat financial condition began to decline. In 2003, Parmalat was caught on debt of 14 billion euro. Parmalat doesn't have sufficient independent directors. The Tanzi family always held a majority. The Parmalat board of directors, which consists mostly of family members of Tanzi and control 51% of Parmalat share. It was unusual for family members to override whatever internal control exists to perpetrate the accounting fraud. So, the summary of this case is the Parmalat scandal broke in late 2003 when it became known that company funds totaling almost 4 billion, at approximately 5.64 billion that were meant to be held in an account at the Bank of America did not exist. On 19 March 2004, Milan prosecutors brought charge against Parmalat founder, which is Calixto Tanzi, others members of his family and company executive for their part in the Parmalat scandal. After 3 months of investigation, the prosecutor charged 29 individuals, the Italian branches of the Bank America, and the accountants, which is Deloitte and Touch and Grant Thornton. The charge included market rigging, false auditing, and regulatory obstruction following the disclosure that 15 billion, approximately 21.15 billion, was found to be missing from the bank account of the multinational dairy group in December 2003. Okay, that's all from me. I will let Nur Aisyah to continue the summarization. Thank you.
Former internal auditors and 3 former Bank of America employees have been jailed for their roles in the fraud. The judge also gave the go-ahead for Parmalat to proceed with lawsuit against the auditors. Parmalat administrator Enrico Bondi is also pursuing another lawsuit against Citigroup in New Jersey State Court. Parmalat had induced United States investors to purchase bonds and notes totaling approximately $1.5 billion. In addition, in August 1996, Parmalat sponsored an offering of America Depository Receipt, which is ADR in the United States. Parmalat actively participated in establishment of the ADR program. This activity made Parmalat subject to SEC rules. SEC, which is Security and Exchange Commission. The SEC charged Parmalat with securities fraud on December 30, 2003 and filed amended charge on 28 July 2004 with covering the following. Parmalat consistently overstated its level of cash and marketable securities. For example, at year-end 2002, Parmalat overstated its cash and marketable securities by at least €2.4 billion. As of year-end 2003, Parmalat had overstated its asset by at least €3.95 billion, which is approximately $4.9 billion. As of September 30, 2003, Parmalat had understated its reported debt of €6.4 billion by at least €79 billion. Parmalat used various tactics to understate its debt, including: first one is eliminating approximately $3.3 billion euro of debt held by one of its nominees entities. Second, recording approximately 1 billion of debt as equity through fictitious loan participation agreement. The third one is removing approximately 500 million euro of liabilities by falsely describing the sale of certain receivable as non-resource when in fact the company retained an obligation ensure that receivable were ultimately paid.
Okay, thank you Aisha. My name is Nur Sofia and my matrix number is 01DAT19F1060. Now I will continue with our presentation. As of September 30, 2003, Parmalat Financiaria had understated its reported debt of 6.4 billion. Parmalat Financiaria used various tactics to understate its debt, including 1. Eliminating approximately 3.3 billion of debt held by one of its nominee entities. 2. Recording approximately 1 billion of debt as equity through fictitious loan participation agreement. 3. Removing approximately 500 million of liability by falsely describing the sale of certain receivable as non-recourse when in fact the company retained an obligation ensure that the receivable were ultimately paid. 4. Improperly eliminating approximately 300 million of debt associated with a Brazilian subsidiary during the sale of the subsidiary. 5. Mischaracterizing approximately 300 million of bank debt as intercompany debt, thereby inappropriately eliminating in its consolidation. 6. Eliminating approximately 200 million of Parmalat's SPA payables as though they had been paid when in fact they had not. And 7. Not recording a liability of approximately 400 million associated with a put option. Between 1997 and 2003, Parmalat transferred approximately 350 million to various business owned and operated by Tanzil family members. Parmalat Financiaria transferred uncollectible and impaired receivable to nominees entities where their diminished or non-existent value was hidden. As a result, Parmalat Financiaria carried assets at inflated value and avoided the negative impact on its income statement that would have been associated with a proper reserve or rate of bad debts. That's all from me. Now I call Muhammad Luqman to continue our presentation. Thank you.
Thank you, Sophia. Now I will continue. Parmalat Financiaria used these same nominee entities to fabricate non-existent financial operations intended to offset losses of its operating subsidiaries. For example, if a subsidiary experienced losses due to exchange rate fluctuations, the nominee entity would fabricate foreign exchange contracts to offset the losses. Similarly, if a subsidiary had exposure due to interest rate fluctuations, the nominee entity would fabricate interest rate swaps to curb the exposure. Next is Parmalat Financiaria used the nominee entities to disguise intercompany loans from one subsidiary to another subsidiary that was experiencing operating losses. Specifically, a loan from one subsidiary would be made to another subsidiary operating at a loss. The recipient then improperly applied the loan proceeds to offset its expenses and thereby increase the appearance of profitability. As a result, rather than have a neutral effect on the consolidated financials, the loan transaction served to inflate both assets and net income. Next is Parmalat Financiaria recorded fictional revenue through sales by its subsidiaries to control nominee entities at inflated or entirely fictitious amounts in order to avoid unwanted scrutiny due to the aging of the receivables associated with these fictitious or overstated sales. The related receivables would be transferred or sold to nominee entities. That's all from us. Thank you.